All right. Well, thank you everyone for joining our webinar on home buying today. I hope everyone here and their families are safe and healthy during these very difficult times. I'd like to welcome the members from the ACBN who are joining us today. My name is Michael Borrelli, and I'm the Senior Branch Manager with Alterna Savings, leading our flagship branch at Bay Street and College here in Toronto. I also have Sharon Morris, who will be helping to facilitate our presentation. She is an experienced banker of over 20 years who provides exceptional member experience and sound financial advice. I'd also like to add that it's a pleasure working with her. So highly recommend you connect with her. We'll share some of the contact details after the presentation. But just a quick little background. I've been working in the financial industry for 18 years, most of which has been with TD Bank, holding various leadership roles. I've recently joined the team here at Alterna Savings, and it's been an incredible ride. The attention we show our members, the experience and the knowledge that our bankers have, and the commitment to the local communities we serve has been remarkable, and I'm very grateful to be part of such an amazing team. Today, we're very excited to spend some time to discuss home buying and the various aspects of the home buying process. Everyone is at a different stage in their life. Some individuals have experience with purchasing a new home. Some are seeing this for the first time. And in either case, the home buying experience is a huge undertaking. And the more information you have at your fingertips, the more educated you'll be when making these critical decisions. Questions like, how much can I afford? How much of a down payment do I need? How do I qualify? Fixed or variable mortgage? These are all types of questions that we'll be discussing in our session today. And we really want to take the fear out of home buying. Just before we get into, the home buying process, I'd like to share with you the Alterna difference. Alterna has been a financial services institution for over 112 years, so a very, very long time, starting as CS Co-op in 1908. We have weathered the Spanish flu pandemic of 1918, the Great Depression of the 1930s, 2 world wars, the 1970s energy crisis, numerous recessions in the 1980s and 90s, and most recently 2008, and are currently navigating through a worldwide pandemic with compassion and understanding. Alterna has endured many challenges throughout the past century, which is a testament of our commitment to our members and the community we serve. What you might not know is that Alterna Savings is a full-fledged financial institution that offers all the same services and products that a typical big bank would offer. From everyday banking products such as checking accounts, savings accounts, to investment products such as fixed terms and mutual funds, Alterna is very much a one-stop shop. As we are highly involved in the local community, we serve many nonprofit organizations, small business owners, and enterprise ventures with packages that suit your individual needs. We are able to be nimble. We can view things with a lens that fits your specific personal or business need. Mortgages, loans, wealth management, you name it, we can help. However, you might be asking yourself, what's the difference then? Why would anyone bank at a credit union? I currently bank at a big bank. Why would I switch? I had very similar questions when I started with Alterna Savings, and I can say with confidence now that the difference is in our membership. At Alterna, you are not an account number, or a faceless customer. You are a member. What does that mean? It means that Alterna is a cooperative between members who have a voting right to make meaningful change within the organization. You get to vote for our board of directors. We offer very competitive rates. We have experienced bankers who have the knowledge and know-how to offer the best possible solutions for your financial needs. Convenient digital banking solutions and a bilingual contact center. One thing that I would like to highlight here is the second point. At Alterna, we put people before profits. As a credit union, we are a cooperative, which means that all investments or products you choose to have with Alterna go back to supporting our members and our local community. Unlike a bank where they earn profits for a shareholder, we're not we don't have to account to shareholders. We account back to our members. Over 3,500 of our members are local nonprofit or charitable organizations. And every year, Alterna donates over $1 million to local organizations across Ontario, including Frontlines in Weston, the Centre for Learning and Development in Regent Park, the Christie Refugee Welcome Center, and Girls E-Mentorship, and many, many more. Alterna truly believes in making profits serve a purpose, and we are the good in banking. So, some of the meat and potatoes. So buying a home, what you'll need. I think it's good to understand, and maybe this is a time where you can just write down really quickly, buying a home is similar to planning many large events. To get what you want, you need to be educated, informed, and prepared. Here's what you're going to need to get started. Number one, understand the cost of home ownership. We'll go through this. Number two, determine your readiness for home ownership. Number three, save for a down payment. Number four, find out how much you can afford by getting a mortgage pre-approval. Number five, consider getting a credit report or understand what your credit status is. This is one part of the home buying application process, and that's something that we look at in order to qualify you. And then also something to consider is find a reputable real estate agent and a lawyer. So before we dig in, we would first like to review some of the advantages of both renting and home ownership. So Sharon, over to you.
Thank you, Michael. I'm happy to be here to share a few tips with you as to how you can get into home ownership. But we're going to look a little bit, look at renting versus owning. When you're renting, of course, there's more flexibility to move that you can, within the mandate of your rental agreement, you can leave and move on to somewhere else. The maintenance costs are sometimes low, and you have a consistent rental payment during the lease, during your rental lease. You can invest what you save in avoiding owning carrying costs. The advantages of owning, however, they are tenfold. You have the security of having a long-term arrangement. You are able to make your plans. For example, if you are purchasing a home that you can accommodate aging parents later on, or you have an expanding family, you have that security that you'll have that property for as long as you would like to have that property. Another advantage of home ownership is the flexibility to renovate. You are able to do whatever you can within the home, whether to renovate your kitchen, your bathrooms. You have that flexibility to do that. Your mortgage payments are fixed over a period of time. For example, if you choose a 5-year term on your mortgage, you are able to have that one payment for that 5 years. You also have the flexibility, in addition to that, to increase your mortgage payment by 20% during that term. So you can maintain your fixed rate for that period of time, or you can increase it by 20%. And one big thing for home ownership is that you're building equity. And equity is the difference between the fair market value of your property and your mortgage. So if, for example, the market value of your property is $600,000 and you have $200,000 left in your mortgage, you would have equity of about $400,000. And that equity you can do for a variety of things. So building equity is an important component of home ownership. And some people use it as part of their retirement planning, that you build that equity so later on, when you want to downsize, you would have been able to build that amount of money in your mortgage so that you can take it out at that time, or you can sell your property and downsize at that time. You don't have that when you are paying rent. One of the disadvantages, a major disadvantage of paying rent, is that you're actually paying somebody else's mortgage. That money is dead to you. Once you pay, that's it. You live in a nice place, a comfortable place, but once you pay your rent, you are actually paying somebody else's mortgage. So hopefully those things will resonate with you so that you would see the benefits of home ownership. The next slide we're going to look at is the cost of home ownership. Because there are costs, for sure. Cost of home ownership is sometimes something that many people underestimate. And we would just like to shed some light on these costs so that you can assess your own situation and create a plan to move on. There are many variables to consider. Throughout your home ownership journey, you should have a good understanding of what costs are associated with closing the home and ongoing costs to maintain. So we have some costs that you are going to incur prior to home ownership. And we're talking about the appraisal fee. That should cost you $250 to $500. And then there's your down payment. There's a minimum of 5%. And later on, we are going to talk about what the 5% means and what 20%, if you're able to come up with 20%, what that means in your quest to home for home ownership. And then there's a home inspection fee. That is $400. That is one aspect of your journey that we recommend that you use, because the home inspection is going to allow you to be confident that you're purchasing a property that is in good condition. And then there's a mortgage insurance premium. And then, of course, the legal fees and disbursements to pay a lawyer to administer the paperwork, and the land transfer tax. Those are your pre-costs, those costs leading up to your home ownership. But once you own that property, there are some costs that are ongoing, and that includes your property tax, your property insurance, because your property insurance is a requirement of every mortgage. And of course, your property tax is a requirement for your lender and also for the government. It's one of those things that you can't get around. You have to pay your property tax. And of course, there are your utilities, heat, and in the summertime, if you have air conditioning, all of those are ongoing costs. And of course, maintenance and repair, and also land maintenance. Those are your costs, your ongoing costs. When it comes to ongoing costs to own a home, that also is part of the assessment when you're seeking approval for a mortgage. Those things are factored into your debt servicing. So when we put your property tax, your property tax, your property tax, sorry, and your
Heating.
property insurance,
Yep.
Property tax and heat, sorry, I've lost my train of thought there. Your property tax and your heating costs, then those are ongoing costs that are associated with the approval of your mortgage. Then we're going to go on to determine your readiness to own a home. And Michael is going to take that one.
Yeah, and just to kind of clarify, some of this can seem overwhelming, right? And that there's, you look at these things and you say, the cost of home ownership seems so difficult to get to. How can I get there? And I would say to you, it starts in small steps, number one. And number two, you have to have the information at hand. In order to make an educated decision on what's best for you and your family, you got to know what those costs look like and whether it fits in your life at this certain stage, right? So again, the more informed and educated you are on home ownership, the better decisions you'll be able to make when looking at certain properties. So determining your home readiness, it's important to know how much you can afford before looking for a home. And I think that's one of the pitfalls that many people go into. They get kind of caught up in the bidding wars, or, oh my God, this person wants this house and I want it too, so I'm just going to put in a firm offer. I would say you need to know for sure what those payments are going to look like. Mortgage payments will be the biggest expense, but there's other costs to consider. So the first thing that you're going to want to do in order to determine your readiness to own a home is to calculate what your assets and liabilities are. Do you understand what's coming in and what's going out? Do you understand what your spending habits are? So again, how much money do you earn on a monthly basis? How much money do you spend on a monthly basis? It includes all of your utilities, gas, eating out. There's a lot of the entertainment, there's a lot of different things that you need to consider when it comes to what do you spend on a monthly basis. And so the difference of what you earn and spend is an estimate of the maximum monthly mortgage payment that you can afford. And so again, we always recommend coming to see a financial expert because we have the tools and resources to really clearly identify what your payment structure would look like, right? But you can make an estimate on your own at your leisure once you do a budget. So, and we'll talk about that quickly later. Calculate the total funds that you need up front. So that's why we kind of talked about what those closing costs look like. Land transfer tax is a big one, something that you would want to inquire about. So land transfer tax, that home inspection, the appraisal, and then lawyer fees, real estate agent fees, things like that. You need to understand how much funds you need to cover the upfront costs, the down payment and all those things too. Determine how your budget will look as a homeowner. So that kind of goes into the cost of home ownership. Once you have the home, what's your bills going to look like? What is that all going to, when you put it all together, what's that going to look like? I would also, we would encourage you to take advantage of free financial planning offered by Alterna Savings to help you prepare for home ownership. You reach out to us, we can help you with your mortgage needs, but you should also think about the financial planning part of your life. It's not only about owning the home and having a mortgage, but how does that fit? How does that mortgage and home fit into the total financial plan that you have and that you're developing throughout your career? And we also have different household budget calculators at alterna.ca or alternasavings.ca. It's there as well. So how to start saving for your down payment? I think this is the first step in figuring out what you're able to save. There's a few strategies to help you save for a down payment. So let me just highlight a couple of them. Take advantage of the interest savings products. I would say right now, across the board in the financial institution arena, the interest rates on saving products are low. Although the high interest rate, although they are low, consider that the mortgage rates are also at an all-time low as well, right? So the interest, the savings portion of it is a great way to park some of your money. But it really depends on the time horizon on how you can invest that money to your advantage. The second piece, I'm going to jump from the first-time home buyers because I want to spend a little bit of time on that. I'm going to jump over to the pay off your debts. You would think that this is very common a sense that you pay off your debts first, but a lot of people seem to keep a lot of debt, especially credit card debt. That's the number one thing that you want to pay first, is you pay your highest interest debt first. Typically, that's a retail credit card or a high interest loan or a line of credit. That's where you really want to invest all of your calories in paying off that debt first, because when you need to qualify for a mortgage, the lower the existing debt you have, the more mortgage you can afford. I'm going to go also then on the right side to find cheaper ways to do things. And so when I read that first, I thought about my mom kind of teaching us and my brothers how to be conscientious on how you're spending your money. My mom would always talk to us about, are you paying full price? full retail price on that, or are you looking for that sale price? And I'll be honest, it stuck with me all these years. And now when I go to the grocery store, I'm only looking for things that are on sale. Again, it's for the bigger picture. For me being able to afford my home, I might not buy that, full price item. Are you eating out a lot, or are you cooking at home? COVID, many of us are staying home, and we're cooking a lot more, and our skills are getting really refined in cooking, which is really great. And I would still encourage you, because it's way cheaper that way. You can buy in bulk. You go to Costco, like as an example for me, myself, I'll buy the big beef tenderloin and then cut it up into steaks, and it saves me at least $50 on our meat purchase. So thinking about how you buy your things, and then how many streaming services do you have? And that's going to be a tough one. And like even myself, I got a Netflix and Disney and Prime and all these kind of things. But do you need the cable? Do you need the Bell or the Rogers and things like that? So really think about how you're finding cheaper ways to do things. And then the last one on this slide that we really wanted to cover was first-time home buyer. You need to take advantage. If you are a first-time home buyer, you need to take advantage of this. I would also like to add, before I go any further, a first-time home buyer is not someone who just has never owned a home and now is owning a home. The first-time home buyers program also applies to people who have not owned their home or have not owned a home within 5 years. So you might be later on in your life stage and you're saying, well, I'm not a first-time home buyer. But if you've been renting for the last 6, 7, 8 years, you're still able to take advantage of the first-time home buyer program. But what does this mean, the first-time home buyer program? This strategy includes using your registered savings plan as a means, so your RSP, as a means to cover some of your down payment. You're able to, if you have money in your RSP, the government allows you to take out that money and put it towards a down payment without paying any tax. So yes, you have to pay this RSP back within a 15-year time period. So you can pay back your RSP within 15 years. So it's very digestible payments, monthly payments that you pay back to your RSP. It's also kind of like a forced savings plan for your future, which is great. But I think it's also a fantastic way to utilize these registered funds towards your down payment. You might also,
and Michael, I should also add to that the amount is $35,000.
Right.
Previously it was 25, but it has been increased to 35,000.
So
you
then
can
Sharon,
take out as a home buyer's plan.
Right. So Sharon, we could take out 35,000 out of your RSP and put it towards your down payment without paying any taxes, correct?
Yes, yes.
Okay. So that's great. The other thing you might be thinking is, I don't have an RSP. I don't have any money in an RSP. Sharon, what would you recommend on that?
Well, the credit union has an arrangement that you can take an RSP loan, and that loan is usually at a very low interest rate, and you can use that within 90 days. You can use that as part of your home buyer's plan. So it's a great way to leverage an RSP loan to put in your home buyer's plan and to assist you in your journey.
Yeah, thank you. And so for me, I actually did that myself. My wife and I, before we got married, we were purchasing a home that was closing in a couple of years. I didn't have as much RSPs in my plan as I would have liked. I took out an RSP loan, put the money into my RSPs, let it sit there for the 90 days. Then I pulled it all out. Oh, and it helped me so much, I will say, because with my wife and myself, we were able to come up with a lot more money for our down payment, which means a lower mortgage amount, lower payments on that mortgage amount for that term, for example, right? So I would highly encourage you to take advantage of the first-time home buyers plan, and please reach out to us. We are the experts in this, and we can definitely share with you different strategies on how to start saving for a down payment.
One other way that I normally encourage people, if you know that you're going to need to purchase in another year or 2 years, start paying yourself first. do an auto contribution as you get your pay into a savings account, and it will build up over time. Once it gets to a certain amount, you can put it in an investment for it to start growing interest. So we encourage you to do an auto where you pay yourself first.
You know what, Sharon, I'm really, really glad that you said that, and I missed that one. I'm a firm believer in paying yourself first. Okay, I do this myself. And even as I have grown in my career, making a little bit more money periodically, I still only have the same amount of spending money, because all of my money, all my payments come into my account and it's all gone, because it's all going to my RSP, going towards my debt, going towards my bills, going towards my savings, going towards some investment. Paying yourself first and doing those pre-populated auto payments is the best thing that you can do. So thanks for sharing that, Karen.
And it really does take some planning. Sometimes individuals feel that because I don't have any money now, I can never own a home. But the answer to that is no. We can help you to navigate you through the various ways, as Michael discussed before, so that you can put yourself in a position that you would have saved for a down payment and have all those costs that you need at before you close your mortgage.
Yeah, sometimes it's as easy as $20 into an RSP every 2 weeks. Start with that. You know, not an exorbitant amount, but you'll be surprised how quickly that grows once you set it and forget it.
Yes, and look at your ongoing personal expenses and see where you can cut some of those things. Don't go to Winners as much, or drink from Starbucks. Maybe you want to go to Tim's to get your coffee, and save religiously every pay and don't touch it. Leave it there because you're saving for a purpose.
Absolutely. Let's get into some of the mortgage terminology, just to ensure that everybody is kind of on the same page so that we know what we're all talking about.
Okay. So these terminologies, you hear them all the time. So we're just going to go through quickly as to what they mean. The first one is your fixed mortgage interest rate. And we indicated that term before. So what it means is that once you apply for a mortgage, there are various terms that you can choose. And usually for first-time homeowners, they like to take a term of 5 years. So your mortgage interest rate is fixed for whatever term you choose. Some people choose 1, they choose 2. There are some instances where people can get up to 10 years term mortgage interest rate. But because the environment is changing all the time, people sometimes don't want to lock in for 10 years. So mostly people choose 5 years. So between 1 to 5 years. So your interest rate remains the same, and therefore your payment remains the same for that fixed period of time. And then there is the open mortgage. It is normally chosen by people who feel that they are going to be selling their home in a short space of time, so they do not want to pay a penalty. But when a mortgage is open, you can pay it out at any time without paying a penalty. On the other side, a closed mortgage is a mortgage that is fixed for a particular period of time, and if you pay it out before your maturity date, you will pay a penalty. Alterna has a very generous prepayment option that you can pay 20% of your mortgage, your initial mortgage amount every calendar year. So in effect, you can pay your mortgage out in 5 years. 20% each year, you can pay your mortgage out in 5 years. I usually like to say that, and people laugh about it, but you never know. You never know. So a closed mortgage is one where you pay a penalty if you decide to sell or to pay your mortgage out before your maturity date. And then there's amortization. It's a schedule of how long.
Sharon, I'm just going to interrupt there. I just wanted to add something. So just 2 things. An open mortgage is typically, if you feel like maybe you're going to come across some money and you're going to maybe pay off your mortgage, you know, 3-4 months down the road, you would go into an open mortgage. Typically, it's a higher rate, but it's a higher rate because you can pay it off at any time. The other thing with the closed mortgage, there is that prepayment. The way that you got to look at it when we say penalty, it's not so much a penalty. It's more about the interest that's owed. So if you make a commitment for 5 years to, pay principal and interest, a certain amount for 5 years, then that's what that contract looks like. So as much as we have an obligation, a bank give you the money at a certain time, then there's an obligation to pay back within a certain time frame. So I just wanted to kind of clear that up.
Yep, okay. Thank you for that, Michael. And we're looking next at the amortization. That's a schedule of how long it will take to pay your entire mortgage off. And it can be in periods of up to 30 years, but the most common period is 25 years. Some people choose 20 years, 15 years. You can choose anywhere between 1 and 30 years, so to speak. The longer your term is, the lower your payment. And when you're choosing which amortization to take, you're going to think of it in terms of what can I afford. Don't take a 10-year amortization when it's going to put a lot of strain on your disposable income. So you're going to take an amortization that will be well within your budget. And then there is the mortgage term, and we spoke a little bit about that before. It's in periods of 1 to 5 years. And your interest rate, whatever it is that you have chosen, will be fixed for that period of time. So your mortgage term is a period of 1 to 5 years where your interest rate is fixed. And then there's a variable mortgage interest rate. The variable mortgage interest rate is one that fluctuates. It's normally attached to prime, and the prime rate right now is 2.45. So your variable mortgage rate is attached to that, and if prime fluctuates, then your rate is going to fluctuate. The problem with that rate is that the amount that goes towards your principal can fluctuate if your interest rate changes. And in some instances, I've not seen it in recent times, where your payment is not enough to cover principal and interest, and so you have to increase the payment. But most times what happens is that more would go towards interest and less towards your principal. So your mortgage amortization is going down at a slower pace. Usually with the variable rate interest in former years, it used to be that these rates were lower than fixed rate, but now it's the other way around, where our fixed rate interest rates are lower right now than the variable rate. And that is what most people choose. It does give you the flexibility, it gives you the peace of mind that when you choose a fixed mortgage rate, that your payment will not change for a period of time. And that is huge to some people, to most people actually. We're going to talk about the importance of pre-approval. It's a very, very important aspect of your journey towards getting a property. And it's important for a number of reasons. First of all, it expedites the process, because once you indicate that you have been pre-approved for a mortgage, the seller is more inclined to choose you to be the one to purchase their property. Because in this environment, there are bidding wars and people going after the same property. So having a pre-approval will put you at an advantage. It also allows you to shop with confidence. You have that in your back pocket. You know that I've been pre-approved for a mortgage, so you can shop with confidence because you know exactly how much you're able to afford. And a pre-approval also will identify obstacles in your application process. It may identify that your credit score is low, and then we can make suggestions as to how you can improve your credit score. It could identify that you are carrying too much debt, And so we will make suggestions as to how you can seek to pay these debts off. Sometimes you might have to wait a while until you fix these things, but it allows you some time to get yourself ready so that you can slide into home ownership very, very easily. So it's very, very important. And typically, it doesn't take a long time to get a pre-approval because we don't ask for a lot of information. We ask that you provide us with your income, allow us to give us consent to pull your credit, and to have a sit-down meeting with someone, whether by Zoom or by telephone, to take the information from you so that we can plug it in and get you pre-approved. We also like we also arm our members with a letter of pre-approval as well, so that once you have been pre-approved, we give you a letter, and the letter will indicate the amount you're pre-approved for, what your interest rate is, what are the conditions. And another important aspect of a pre-approval is it is not an approval. Once you have received, once you have found a property, then you are going to confirm all of these things. So we ask that you always put in your agreement the condition of financing. Home inspection and financing, we encourage you to do that, because there are some things that will come after you've found your property that you would not know prior to having found that property. And one of them would be the condition of the home that you're purchasing. Once you do, and Alterna will do an appraisal, because we need to know that the value of the property is in line with the mortgage that you're applying for. The home inspection is going to allow you to know what condition your home is in. Are there any cracks in the foundation? Is there any molds? And sometimes you can leverage that inspection to allow the person who is selling the home to fix those things, so that once you get into that home, you'll have a healthier home, so to speak. So a pre-approval is very important, and we encourage you to get that prior to looking for a property.
Yeah, and one thing that I'd like to add to that too, so inspection for sure, 100%, unless it's a new build. I think an inspection should be mandatory. You got to think about plumbing, electrical, things like that as well. I like that point that you bring up, Sharon, that it gives you leverage on either the seller is going to fix these problems or they're going to lower the price based on, that I have to fix it as the buyer, right? The other thing that I'd like to make sure that you consider is, overbidding on properties right now. It's a hot topic over the last couple of years. People are bidding and overbidding on the value of the home. We want to be very, very clear with us and with all of the banks, right? If the bank's appraisal comes back, your property as an example, of $500,000, and you decide that, you're part of the bidding, get caught up in the bidding war, and you paid $550,000, that extra $50,000 needs to come out of your own resources, financial resources. We can't lend it. Just because you bought it for $550,000 doesn't mean that the appraisal is going to come back at $550,000. So just be careful with that. And that's why that condition of financing, a 5-day condition of financing should be there along with the home inspection. Highly recommend. Going in firm is a risky business. That's for sure. So yeah, mortgage risks. Sharon, you're taking one? Yeah, go ahead.
Okay, here at Alterna, we pride ourselves on being upfront with you. But it is important that when you're applying for a mortgage with any institution that you read the fine print. Some considerations for when you're shopping for a mortgage include introductory rates. Sometimes companies, organizations may give you a rate up front, but in the fine print, you may find that after a year or after 2 years, the rate will change to a higher rate. So you have to be careful of that. And if there's a cashback offer, you know, it's always good to get cash back when you're buying a home because you feel that you can use that money to do something. But remember, usually with a cashback mortgage, the interest rates are usually higher because they have to account for that money somewhere. And also, if you sell your home and you're paying out that institution, you have to repay the cashback. And even if you renew early or sell, oftentimes it has to be repaid in full. So you have to be careful of that. The penalty that is calculated when you sell your home, it depends on the mortgage balance at the time, the balance of the term. So it varies based on the individual. And mortgage penalties can be 3 months interest or interest rate differential. So when you get into a mortgage situation and you are locked in for 5 years, you have to, part of your plan is to remain in that house for at least 5 years. Because if you pay an organization out before 5 years, you will pay a penalty for getting out of that mortgage. So it can be 3 months interest or interest rate differential. And in today's market with interest rates so low, it is now being calculated at interest rate differential because it's whichever one is higher. And right now, interest rate differential is the higher amount, and it is significantly higher. So when you're getting into a mortgage, whatever term you choose, you're planning to stay in that mortgage for that period of time. Now, and also you can port your mortgage, and porting means that you move your mortgage as it is from one property to the next. Same interest rate, same, all the terms and conditions would be the same, but you're just moving it onto another property. And you have to be careful about porting mortgages as well, because also your income is a consideration at that time as well. So all these things you have to think about prior to going into a mortgage arrangement. But remember that when you have an organization like Alterna, very transparent and helpful in the way that we treat you as owner of this company, you'll find that a lot of these things are disclosed to you and explained to you at the very outset, so that the risks involved in some of these things that I mentioned, I've worked here for almost 10 years and I've not had anyone encounter having to say that we did not tell you about the penalty or what happens when I port. All those things are disclosed in the agreement that you sign.
Yeah, those are again, great points, Sharon, that you bring up. An interest rate differential. So if it's a 5-year term and you decide to break it at 3 years and you're not going to be porting the mortgage or moving the mortgage over to the new property, that interest, whatever was remaining for the remaining 2 years that's what you're going to pay interest-wise. So that's typically what that interest rate differential looks like. What I like is that we are able to port mortgages on most situations. We can bring that mortgage over to a new property that you're buying. But one of the first questions, even myself as an advisor would ask is, are you planning on staying in your home? Are you planning on staying for 2 years, 3 years, 4 years? What is the deal? Because if you're telling me that you're only going to stay there for 1 year and you're thinking about selling, that's going to change the recommendation. So our job as financial advisors is to ask open-ended questions to get as much information from you to make the best recommendation possible. So when you do speak to one of the alternate representatives, and sometimes we get feedback like, well, those are pretty, there's a lot of questions that you're asking me, and they're very intense questions. Understand that it's for your benefit. It's for us to give you the best recommendation.
For sure.
If you don't tell us that you're planning on selling in a couple of years, and we put you in a 5-year mortgage, that you're not going to be very happy after 2 years, and you want to sell your property, and there's a big penalty. Work with us and have an open dialogue because we can give you the best recommendation. All right.
The credit score. You see that scale there, 300 to 900. Try not to get to 300. And individuals get to 300 because they don't pay their card, their debt on time. They don't pay them at all. You're maxed out on your loans and your credit cards. You max them out. So your credit score is an important component of your mortgage application because it tells a lender how you're going to treat your credit. If you treat it respectfully, then you will have a higher score. You'll be more towards the 900. 900 is a maximum. I have never seen anyone with 900. And I've seen 850, the maximum that I've seen, which is an excellent score. I would say that is an A++ score. So if you're able to keep your credit score between I would say 700 to 750, you're in an excellent position to qualify for a mortgage. That is one of the components along with your income. So you need to keep your credit score strong.
Yeah, I really like, Sharon, I really like how you position that, that if you treat your credit with respect and you treat it well, then you're going to get the benefit out of that, right? And so I think a lot of people have a misconception on credit and what affects credit and how to treat credit. I think even at an early age, we try to, do seminars and financial literature and provide financial literature to people that are coming out of high school, because I think it starts right there, right when you're able to get your first credit card or your first cell phone under your own name. That's when you start building your credit. And so time and time again, we've seen people not really care and put that respect into it. And then that really hurts them later on, 10 years later, they want to buy a mortgage, but you had a bunch of collection items or a bunch of write-offs that, well, I was a young kid at that and I'm responsible now. Well, it will have an effect. So important for your knowledge, but also to share that to some of the younger generation that's coming up about how to treat credit.
The good news is that if you have made mistakes with your credit and now you realize how important it is, you can make changes and it will improve over time. It doesn't happen overnight, but it will improve over time. If you have collections on your credit bureau, try and clear that up. You can go back and pay that, and that will have a positive impact on your credit score. And start paying your bills on time. One thing that a lot of people don't know is that some phone companies report on your credit bureau when you have missed a payment. So if you're not paying your phone bills on time, start doing that as well, because that can also negatively impact your credit score.
Yeah. So the other thing that I'll just add on this one, because in light of time, I don't want to take up more than an hour of your time, but I also wanted to, other things that we consider when applying for a mortgage, what we look at is not just the credit score, but we also consider your income versus debt ratios, right? So it has to be within a certain ratios. Obviously, you need to have more income than debt. Do we have a history of the missed payments or collections or bankruptcy that's captured in our credit? The credit utilization that Sharon mentioned, are you maxed out on all of your credit cards? Because that's not a good sign of respecting how to use your credit. Do you have multiple loans, lines of credits, multiple credit inquiries? Do you seek credit regularly? Because it's a bit of a red flag for financial institutions if we see that you're really seeking credit out there. So we're going to go on to the next one. Finding a reputable a real estate agent and lawyer. You have to leverage your network within your social circles and communities. And I think, with the ACBN here, you have a large network and a large social circle there. Leverage the people that but some of the questions that you can ask to ensure that you've chosen the right real estate agent would be, how long have you been a real estate agent? What areas have you sold the most homes in? Do you buy and sell homes similar to what I'm looking at? You know, and at the end of the day, why should I choose you as my agent? There's a lot of agents out there. There's a lot of lawyers out there. Let them sell you their credit, their credibility, their credibility statement. Why should I choose you? Because there's a lot of people to choose from, and you really need to stick out. And even with lawyers, how long have you been a lawyer? What are your fees? Because fees can vary for lawyers when you're purchasing a new home. Can be anywhere between, I've seen $800 all the way up to $2,500, really depending on who they are and who they cater to. And again, ask them, why should I choose you as my real estate agent or as my lawyer? Sorry. We'll just quickly touch upon, Sharon, about fixed or variable.
Okay, when you're deciding whether to choose fixed or variable, it depends on your financial situation and your preferences. A fixed rate mortgage stays the same for the term, including the mortgage payment. A variable rate changes with Alterna's prime interest rate. And as I mentioned before, the prime interest rate right now is 2.45, which means that if interest rates increase, your mortgage payment may remain the same, but more of it will go to paying the interest on your mortgage. Typically, mortgage interest rates are low for variable rate mortgages, but as I said before, they are no longer, that's no longer the case. At Alterna, we provide you the flexibility to convert to a fixed rate mortgage at any time. So if you decide to choose a variable rate mortgage and you see interest rate, the interest rate is rising, that you can choose to lock that into a fixed rate at any time. Some people like the stability of budgeting with a fixed rate. Variable rates come with a little bit of uncertainty. So if you want to have that peace of mind, this is my mortgage payment and I'm going to have that for 5 years. And on top of that, I still have that 20% repayment. So these are some of the things that, that you can think about when you're choosing a fixed or variable rate. And in my experience, most first-time buyers choose fixed rate mortgages because it's at that time when you're going into the unknown and you want to make sure that you know what your payment is, and this is what I will have to deal with for 1 to 5 years.
Yeah, I on a personal experience here too, I've always been a fixed rate kind of guy, and that's just me, right? And that's who I am. I'm a very, I like to have that peace of mind. I like to know what my payments are. I'll be honest with you, did I lose out on a lower variable rate for a few years? Of course, yes, I did. But it was more important for me, the difference between whatever, 25 basis points, 50 basis points. It was important for me and my family to sleep at home. And I know what those, I can plan my future for the next 5 years. I know that that payment is solid. Other people like to see that lower payment and, are comfortable with some of the variable interest rate changes that happen. So it really depends. During these COVID times and some of the unknown, and with the low interest fixed rates that are happening right now, that's typically our recommendation in the current situation or the current rate environment. So we're almost concluding here, but just to go through the an 8-step guide to purchasing a home. I think it's important to make sure that you're ready and understand the cost of owning a home, not only closing, but also ongoing costs. Absolutely get a mortgage pre-approval. You need to know where you're at when it comes to affordability. You don't want to be at the high top end where you become what they call house poor, where all your money goes towards the house and you have nothing left. But you definitely need to know what that floor and ceiling look like. Find that reputable real estate agent and lawyer. And I do say reputable. You need to have reviews. You need to know, coming from someone, like a friend or a family. It's very difficult to trust someone that is not reputable or doesn't have great reviews. Make an offer on a home that fits your needs and budget, and in that offer, make sure that there's an inspection. That is, in a home inspection to ensure that, again, the big things, big ticket items, foundation, like Sharon said, electrical, plumbing, those big things are intact. And that kind of goes into number 5. 6, finalizing your mortgage is with your lawyer. It's sitting down with your lawyer, figuring out the paperwork, finalizing the agreement with your financial institution, hopefully, and finalizing with them, closing the deal. On the day of, you're going to need to come to the bank, some funds to send over to the lawyer. Our back office sends stuff to the lawyer. Lawyer will call you, sign some paperwork, give you the keys, and then you're ready to move in and then start the ongoing cost of your home. But it's a very exciting time when that happens, and that's the most rewarding part. Sharon, is it not the most rewarding part to see somebody close?
It is the most rewarding part. And we do have so many testimonials of persons after they've moved in, coming back to say, thank you for making it so seamless. Once you have applied for a mortgage with us, we literally walk you through the entire process, getting you approved, getting your documents done and signed, and then for you to move in. And even after that, if you need assistance with setting up your property tax payments, we can help you with that. You can pay them on your own. Alterna allows that, but we can also set up an auto for your property tax payment. So it's a whole package that we offer of help. And I think that being educated and informed about this process makes it so much easier for you to understand what the options are, what the risks are, where can I get help, who can I talk to, and to allow it not to seem so frightening, because it is a large, it may be the largest investment that you've ever made in your life, but it is a very important investment in the life of yourself and your family. Building equity, living somewhere where someone is not going to give you notice to leave, being able to renovate, being able to prepay your mortgage if you should come into some money, and also to have that connection with a banker at Alterna that you can ask for advice and assistance. And as your home grows the equity, then you can come back to get a secured line of credit, a line of credit where you pay interest only. It's secured against your property, but it allows you the flexibility that you pay what you can on the mortgage, just pay the interest only. So it's a long-term relationship, and we really believe in relationship banking. It is what we do here at Alterna.
Yeah, that's a great way of putting it, Sharon. Relationship banking, absolutely. We hold your hand through the whole process. And the other word that I think I really like that you used, Sharon, was is securing your investment. A home is an investment. It's not so much, real estate is something that typically grows with time, and it shouldn't be looked at as a depreciating asset. It's an appreciating asset, especially in the GTA anyway. And so I like the word of using, purchasing your investment. It's more than just a home. I just really quickly wanted to touch upon our mortgage promotion that we have at Alterna. I think this is a very, very competitive rate, and you can do your shopping as well. And I don't think the other banks are coming close to this. We have a 5-year high ratio fixed mortgage. So high ratio means that you have less than 20% down payment. So if you have less than 20% down payment on the home that you would like to purchase, we're able to offer you a 5-year fixed mortgage rate at 1.64%. These are the lowest rates in history. I can tell you that firsthand easily. It's never been lower than this. This is a great time. If you're in that position to purchase a home, this is the great time. I'd also just like to pull your attention to some of the incentive program that we have. Depending on the mortgage amount, there is a cash incentive that can help you pay towards. So for example, if you get a $400,000 mortgage, and you're approved with us, there's an $800 cash incentive that can be used towards your appraisal. That can be used towards your legal fees or with your lawyer. If you don't have an appraisal, you don't have a lawyer or you have a friend that's helping you, that's $800 that can be towards, bills or utilities. So I definitely think it's something to think about and using. I'm not sure what all the other banks are offering, but I do know that this is a very, very competitive offer, and we would love to see you in our branch. So questions. We had some questions previously, and we wanted to kind of address. One of them was, and Sharon, I'm going to ask the question, and maybe you can kind of give us the answer. So if I don't have 20% down payment, how can I apply for a mortgage? How does that work?
You can deposit less than 20%. But in that case, it is called a high ratio mortgage. And Michael mentioned before that the 5-year rate for a high ratio mortgage is 1.64. So that in itself is a huge benefit. So even though you pay default insurance, it's a requirement by law that if you're depositing less than 20%, then you have to do insurance, CMHC insurance or Genworth insurance. Alterna uses Genworth mostly. And that cost can be financed. So that is added onto your mortgage, and you pay that over the term of your mortgage. And another way that you can qualify if you don't have the 20% is to your home buyers plan, RSP home buyers plan. Now we spoke about that before, that you can take $35,000 without penalty from your RSP, pay it back over 15 years, and you can do that up to $35,000. And how I look at it, the RSP is actually your money. You are lending yourself that money. You're borrowing from yourself. But the government requires that you put that back. You're recontributing. We call it you're paying it back, but you're recontributing back into your RSP over 15 years. And I think that is an excellent way. I see a lot of people who have benefited from using their RSP in that way.
Yeah, thank you. I'm going to go to, my credit score is not the best. I have a poor credit score. How can I improve this to help me, approve for a mortgage?
If you have a poor credit score, there are several ways that you can improve your credit score. You can start paying your bills on time. If you were not doing it before, then start it now. Right. And teach it to your children. Teach it to your children so that the next generation will understand that your credit is a very important piece. And what I have come to realize as well, if you don't have credit, it's also not good. If when we pull your credit bureau and there's no score, which means that you've never had a credit card, you've never taken a loan, even though I would rather not have a credit card or a loan to be able to pay. But it is important that you seek to build your credit. You can take a credit card, you don't have to keep a balance. You use a credit card, even a credit card of $500. You buy your grocery, you go back home to your computer, you pay it back. That in and out, you take it out, you put it back in, will build your credit. So you don't have to keep a balance on your credit card, you just have to use it. So not taking a credit card, not applying for a credit card is not to your advantage if you want to be able to take a mortgage. Another way that you can build your credit score is to pay attention to your phone bill, because I mentioned before that it is something that people miss. You have your phone bill and you say, oh, I'm not paying it this month, I'm going to pay it next month. Bad idea. Pay your phone bill every month, and especially there's some companies that religiously report to the credit bureau when you have missed your payment. Another thing you can do is to periodically check your score. Pull a credit bureau. You can get a free one from we mostly use Equifax, but there is also TransUnion, Michael. But you can call Equifax or go online and ask for a free report. I think we are entitled to a free report. I'm not sure how often, but it's always good to check your credit to see how you're doing. Because it may be something that you forgot about. Believe it or not, people forget sometimes that they have this, you have a small balance of say $20 left on a credit card and you've forgotten about it. That can negatively impact your credit score. So you have to pay attention to your credit by getting a free report from time to time.
Yeah, that's great. That's great suggestion there too. Getting a credit score, once a year, once every couple of years. Good to know where you're at. It's also a good way of understanding, just in case some, for identity theft, or there's, some credit facilities that are under your name that you don't know about. Good to have a good understanding because there is still a lot of fraud. That's how. Then the last question that we have is I'm a business owner. I'm an entrepreneur. I'm paying myself minimal, for tax purposes. So how can I get approved? For example, I'm only showing 20,000 on my notice of assessment, so I'm only paying myself 20,000 a year. How can I get a $500,000 mortgage?
It is. Well, we see this a lot where people are self-employed. They write off a lot of things, and unfortunately, what is used for lending purposes is income that is reported on line 150 or line 236. So people write off their income. I'm actually earning 200,000, but I'm only reporting 20,000. The 20,000 is what is going to be used to qualify you. Now, if you are in that position and you are going to be buying a home somewhere in the future, start adjusting that, speak with your accountant and whatever they have to do so that you can be reporting a higher income so that you can qualify for a mortgage. In some instances, the Alterna will look at your financials. You'll have to declare your full financials. And then they may, on an exception basis and on an individual basis, write back some of those things that you had written off. So it's on an individual basis where we have to look at your particular situation and see where we can help, whether you will write back some of your written off items or you start paying yourself more so that can be reported for lending purposes. And I think Michael has a story. He has a friend who had to do just that.
Yeah, that's exactly it. Yeah, my friend, a very close friend, in the sheet metal business, had his own business, making the 200,000 a year, but only declaring 20,000. And so, he indicated to me, I need to get a mortgage. So how can I qualify? Or I'm thinking about buying a home. How can I qualify for the mortgage? And then we talked about, you're going to need to start paying yourself if you want to get it through, a financial institution of a reputable financial institution. You're going to need to pay yourself. So we had to bump them up for a year and a half. We bumped it up to 80, 90,000. But showed on his notice of assessments, and then we were able to work with that in conjunction with his business financials, because we had to show it. So I think, at the end of the day, when the number one thing that we can say to you is come and see us. And I know during COVID, it's a little bit more difficult and everybody feels a little bit differently. I can assure you that in branch, especially at the main college location, we have all the protective equipment in place. We have, the sneeze guards, our physical distancing, we're all wearing masks. And again, there is even an opportunity to maybe do this, over Zoom on a virtual way. And again, it's all done on an individual basis. Allow us the opportunity to help you with your financial needs. So that concludes our presentation for today. On behalf of Sharon and myself, I'd like to thank you for taking the time. Hopefully this was insightful. Hopefully it brought you, really, I think if we could just make you think of more questions, then we've done our job. I hope you actually do have more questions and that you reach out. We're gonna have a follow-up email that's being sent to all the people that have registered for today's session. And again, I would encourage you to reach out to myself and Sharon. Our contact information is gonna be there. And I hope you guys stay safe and have a great holiday season.
All right. Thank you. Bye.
Okay, thanks very much. Bye-bye.